Hello students and welcome to the lecture. So students, as we know that we are covering the financial system and basically what we are doing the Indian banking system. Okay. And in the Indian banking system, basically these are the topics which we have to cover here, like starting with the generations of banking, thereafter the banking sector development 2014 onwards, and last is the risk in banking. Okay. So far, we had done with the generations of the banking. We had seen all the four generations. We had discussed them in detail. Thereafter, what we are left with, we are now left with the banking sector development 2014 onwards. Got it? And the risk in banking also. In the previous lecture, basically we had started with the banking sector development. Okay. And we had started with the GEM. Okay. Which was launched on August 2014. Okay. So now it's my question to you. What do you mean by GEM? What is the full form of GEM? I have told you the year in which it was launched. Now is the question like, what do you mean by GEM? For this, I'm providing you, you can say 15 seconds. Then you have to answer. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. The time's up. So basically, the GEM stands for Jan Dhan Yojana. Okay. It stands for Aadhaar integration. And last one is the mobile banking. This is the GEM. Jan Dhan Yojana, Aadhaar integration, and the mobile bank. Okay. So we had discussed the Jan Dhan Yojana. Okay, like what do you mean by the no frills account? What is the meaning of minimum account balance and all? We had discussed the Aadhaar integration, like how the Aadhaar made it easy to open the bank accounts, and now we are left with the mobile bank. Okay, so we will start with the mobile banking. I hope that you have revised the previous lecture so that you uh, could have the idea of this particular topics which we had discussed in the previous lecture. So now let's start. After Aadhaar integration, now we had the mobile banking. Okay, so what do we mean by the mobile banking? Let's see. The proliferation of mobile phones has been leveraged to promote mobile banking services. Mobile banking allows individuals to access the banking services such as account balance checks, fund transfer, and bill payments through their mobile phones, even in remote areas. Okay, so basically, it was nearly about 2006 to 2008. Okay, when the smartphone launched in India. Okay, that was a time period when the smartphone was launched in India. Like you could also call it as a touch screen phone. Okay, so when it was launched in India, basically smartphones are no longer like a normal phone in which you could use it for calling and all. Basically, they are designed to function as a mini computer. Okay, if you having the smartphone right now with you and you have the smartphone in anyone with your family, you could check it. Okay, these are work as a mini computer. Like maximum things a computer could do, mini computer or you can say your smartphone could also do. Okay, and even in some areas the smartphones are better than the computers. Got it? So this is the main thing. All right, so remember in the previous lecture also I had told you that the population were becoming the internet population, right? The people are using the internet effectively and efficiently. Okay. And with the rise of the technologies like the 4G and the 5G, things got completely changed. Okay. And you can say with the year of 2014, 15 onwards, or you can say late 2014 and the early 2015 onwards, we could see the change in the internet charges in India. Like there was a competition in the market in order to launch the 4G and the 5G services. So because of this, the internet charges got down. Okay, this is the aim. All right. So now it's a picture I have portrayed in front of you. So the mobile banking is basically, you can say, the idea of allowing the individuals to get the access to the banking services such as the account balance checks, the fund transfers, and the bill payments through their mobile phones, even in the remote area. Okay, like you can say, suppose if we talk about prior to 2014 and the time period when the mobile phones and the smartphones just were launching in India. Okay, they were not so popular as they now. So suppose if this is in bank XYZ. Okay, so whenever you open the bank account, you having the passbook, you got the checkbook. Okay, and if you using them right now and not right now, basically you can say that it is better than if you ask your parents, like when they had opened their bank accounts in the XYZ and when they had received these particular books, like the passbook and the checkbooks, just ask them. In order to keep them updated, they had to visit the okay, they had to visit the bank branches. Okay, in bank branches they have to line up. Okay, they have to deal with various counters like passbook counters, like checkbook counters, like cashiers and all right. Thereafter, then they go to the updated passbook and the checkbook. Okay, but if we talk about today's scenario, because remember in the IBS or the Indian banking system, I had told you that we will start with the past, connect it to the present, take it to the future. So the past is dead. In present, if we talk about it, so you can say, suppose if you having the account in the XYZ, you could download the XYZ's mobile application. Mobile application, okay, or you could visit the website of it. Okay, there you have to do the login, and in login sections you will get an option to update your passbook and the checkbook in the digital form. Okay, and if you want it to the physical form, you could get it deliver at your doorstep in the physical form. But for this, you have to pay some charges to the XYZ bank in which you have your account. Okay, so now you could see like how easy it is. You just have to take your phone out, just download the mobile application or the website, and then you have to just click some, you can say the options, and then you will get your digitalized updated passbook or the checkbook and even the physical form. Okay, so this is the convenience provided to you through the mobile banking. Even even you could check your account, you could do the fund transfer by using the UPI, and even you could set the reminders for the bill payment so that you don't have to pay the bill again and again, but you could use the bill payment reminders. It means that suppose if your entire bills are for rupees 10,000, okay, and these bills are 2,000 for each, it means that total you have to discharge the 5 bills and each bills having the value of rupees 2000, it means that total amount is 10,000. Okay. So if you opt for the bill payment reminder, you are no longer required to keep the things in your mind for a long time. You have to pay the 4 bills, just instructed, sorry, 5 bills, just instructed the bank, provided the amount, and thereafter the bank will discharge all the bills. Okay, got it? So these are the some kind of services which are provided to the mobile bank. Got it? Thereafter, licensing of the payment banks and the small finance bank. In addition to the GEM Trinity, the banking sector has witnessed the licensing of the payment banks and the small finance banks to further enhance financial inclusion and last mile connectivity. Okay, like if we talk about the payment bank. Okay, so if you are using the online fund transfers, online fund transfer, then you must be aware about the payment bank. Okay, the latest example of it is the Paytm payment bank. Okay, now you will ask me, if we talk about the online fund transfer, so you could also make it through the traditional banks. Okay, suppose if I'm having my account in the bank called XYZ. Okay, if I have to use this account for making the online fund transfer or online payment, I could make it by using its own application, or by using the Google Pay, in short GPay, by using the Phone Pay, okay, by using the Amazon Pay, Paytm, and so on. Beam UPI, you can also say. All right. So if I could use these ways to make the fund transfer, then why should I use the payment bank? Okay, because the payment banks having some exclusive benefits. Exclusive benefits. All right, like you could get the rewards while making the payments. You could get the cashbacks while making the payments, but you have to submit the amount in the account of the payment bank, and then you could use this amount to make the payments on which you will get the rewards and the cashback. Okay, so because of this, the people generally prefer to having the accounts in the payment banks rather than on the traditional banks. So now the question is, we have seen that it is beneficial for the customer. Now, why it is beneficial for the banking sector? Okay, so if we talk about the online fund transfer and all right. So if you are making the larger transfers, suppose if you're making the transfer which having the value more than rupees 1 lakh, okay, then it is better to use the traditional banking. Okay, because the amount is bigger. But suppose if you are using it in your day-to-day life, okay, that you are making the transfer of rupees 10,000, 1,500, rupees 20, rupees 40, whatever you can say. Okay, so what happened? The traditional banks will get engaged in the online fund transfer of the small denomination or denomination, you can. Okay, so to reduce the burden of this small denomination transfer, which are generally not so useful and you can say not so important for the traditional banks because they already engage in various activities, payment banks are the best option. Okay, not only they are providing the rewards and cashbacks, even they are reducing the burden on the traditional banking. Okay, so that's why the payment banks were introduced, and they are, you can say, important for the banking economy. Thereafter comes the small finance bank. Okay, small finance banks are basically the banks which are generally, you can say, equipped for specialized financing. Okay, for the specialized financing, these are the small finance bank. Okay, so payment banks are the new category of bank introduced by the Reserve Bank of India in 2014. Now this is very, very important. Okay, here is the two questions. Right, the first is, which body introduced the payment banks in India? The answer is Reserve Bank of India. Okay, second is the year. So remember, that was the year of 2014 when the payment banks were being introduced formally by the you can say, Reserve Bank of India. All right, these banks can accept deposits, issue debit cards, and provide remittance services, but they cannot lend money. Now this is very, very important. Okay, like if we talk about the traditional bank and if we talk about the payment bank. Okay, so how the payment banks are different from the traditional bank? We say that the payment banks provide the rewards and all. Traditional banks sometimes also provide it. Is this a very difference? No. So what is the difference? So for this, we have to understand the two primary functions of the bank. First is accept deposits. Okay. Second is grant loans. Got it? But if we talk about the payment banks, which means accept deposits, grant loans. Okay. So the traditional banks are allowed for both, which means they could accept the deposits, they could grant the loans, but the payments banks are permitted to accept the deposit but could not grant the loan. Got it? They could accept the deposit. Why? They could accept the deposits. Why? Because in order to make the payments, they required some deposit amount, right? That could be used for make the payments. So they could accept the deposit, but up to the limited value of rupees 1 lakh only. Okay, it means that no account which is opened in the payment bank could hold more than rupees 1 lakh at a single time. Okay, rupees 1 lakh is the maximum value which could be deposited in these payment banks. All right, till the grant loans, or you can say as far as the grant of the loans is considered, so there is no permission to the payment banks so that they could grant the loans. But they could issue the debit card so that you could withdraw your money. They could provide the remittance services. Okay, but they could not lend the money. Please keep this thing in your mind. Payment banks focus on providing the banking services to the unbanked and the underbanked population, particularly in the report area. Okay, because if we talk about it, remember, the traditional banks oftenly focus on the urban and semi-urban areas. Why? because the people are living here are beneficial for the traditional banks. They could afford the loans, they having the large amount to deposit, they having the employment and all, so that they could avail the services of the traditional bank. But when we talk about the rural areas, and you can say remote areas, rural areas and the remote areas, when we talk about these areas generally does not preferred by the traditional banks, because the traditional banks are not getting so much benefited by these areas. All right, but if they want to use the you can say online fund transfer, so for this they required a bank account, they required a banking services so that they could transfer the money from one account to the another account, right? But as we have seen, they are, you can say, not so preferred by the traditional banks. So in such a case, payment banks comes in the picture. Okay, payment banks basically available to the rural areas and the remote areas also. So these people could use the payment banks through the application, or you can say through the website, and they could make the online fund transfer and could use the services. Okay, so keep this thing in your mind. Small finance bank. Small finance banks are the another category of banks introduced by the RBI to cater to the banking needs of the small businesses, micro and small industries, and other unorganized sector entities. Okay, now here it is also the thing to understand. If we talk about the traditional banks, okay, and if we talk about large finance, okay, if we talk about them, then these banks also having the limited resources, right? And because these having a huge consumer base, so that's why they having the you can say high number of obligations, high number of obligations, which means that the more customer base the one party has, the more number of obligations and responsibility it will have. Okay, so that's why what they try to put resources in a manner to optimize the high profit potential. Put resources in a manner to optimize the high profit potential. Got it? But limited resources, high number of obligations. This generally this leads them to prefer the high potential clients only, because the high potential clients are capable to bear the loans on the high interest rate. It is safe to make the investment in their businesses. All right. And even the high potential clients could open the accounts with these traditional banks and the large financial banks and could deposit a handsome sum of amount in their accounts, which could be used along with the capital, okay, for the liquidity, okay, or you can say liquidity. All right. But what happened to the small businesses, the small enterprises, the small, you can say, small scale industries? What happened to them? So, to cater their needs. Basically, the small finance banks were introduced. Okay, so the small finance banks having the you can say specialized tasks to meet the needs of the small businesses, the micro and small industries, and other unorganized sector entities, which are generally not reachable to the traditional banking systems, and you can say the large scale banking system. Okay, because the SFB is only dealing with this limited number of clients. That's why they're having the low obligations. Okay, so that they could easily finance the entities without any issue. All right. SFBs focus on providing the credit and the other financial services to the undeserved and the unserved segments of the populations, which are generally being ignored or excluded by the large scale banking industries and the traditional banks. Why? I have told you. Thereafter, impact of the GEM Trinity and the licensing of the payment banks and SFPs. Like, what was the impact of them? The GEM Trinity and the licensing of the payment banks and the SFBs have significantly expanded access to the banking services, especially in rural and the undeserved areas. Okay, these initiatives have helped in reducing the dependence on cash transactions and promoting the digital payments, thereby contributing to the government's efforts towards a cashless economy. Okay, because when the dependency on the cash transactions and the digital payment will be promoted, or you can say when the dependency on the cash transaction will reduce and the digitalized payment will be promoted, there will be a easily surveillance or the track or the transaction within the economy. This will help the government to make the cashless economy and you can say secure economy. All right, and it will also reduce the corruption cases, because if the bribe has been transferred through the online transaction, then it could be easily tracked down and this could be easily proved in the court. Okay, the introduction of the payment banks and the SFBs has increased the competition in the banking sector, leading to improve the efficiency, innovation, and the customer service. Okay, because remember, I had also told you in the previous lectures, whenever there will be a large numbers of options available to the segment of the population, or you can say to the entire population, there will be a competition. Okay, because each and everyone will try to catch more and more customers so that its base could be, you can say, increased. All right, conclusion: the adoption of the GEM Trinity and the licensing of the payment banks and SFBs have been instrumental in advancing the financial inclusion and last mile connectivity in India's banking sector. Okay, because through GEM Trinity, we make sure that the people who were not interested in opening of the bank accounts because they were not capable in maintenance of the minimum account balance. Okay, so these type of peoples could also be included, or you can say indulged in the banking economy. Why? Because of the no frills account, or you can also call it as in zero balance account. All right, payment banks and the SFBs served the need of the remote areas and the undeserved, or you can say uh, underrated population segments of the entire population. Okay, these initiatives have helped in bringing banking services to the doorstep of every citizen, have and have played a crucial role in driving the country towards a more inclusive and a digital economy, as we had discussed. Okay, so students, basically in this lecture we had done with the banking sector development 2014 onwards. In the next lecture, we will continue with the risk in banking. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture, and what we say, we say thank you.